Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having an amazing day today. Starting the week strong, we are going to be taking a look at Bitcoin, discussing exactly what is happening on the short term, the macro, the weekly, the daily, and basically everything you need to know about this recent short-term move toward the upside. Is this move enough to sustain and eventually break out, or is the risk of a downward correction still in play? We're going over the triggers we need to see to be confident in a reversal and to be more confident in a correction. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP channel. To do that, you can go ahead and click the pinned comment of the free channel, contact our admin by clicking the name here, contact us, check out the first link to find a 50+ month trading track record, and the second link to take you on a 10-minute video tour inside the channel, showing you what you'll get access to, how it all works, and of course, the two channels, the VIP group chat and the VIP trading channel. Check it out. We have over 700 members and have been operating since 2021 Feb. We'll see you in the channel. Let's go ahead, guys, and jump into the video. So as we can see, over the past 24 hours, we have seen the price action sustain above that weekly uptrend established on the low at around March 11th and retested twice on 19th and of course on the 23rd. We've seen the price action push into the $88,000 region, still very much sitting in this weekly level of resistance. We can see on the daily chart here, pushing right into nearly that buy side liquidity, or should I say that prior sell side liquidity at around 89,000, and on the short term rejecting from this level, currently finding a solid amount of resistance at this region. With confluence of this weekly downtrend. As we discussed in yesterday's video, for Bitcoin to confirm this reversal and to confirm that we have essentially absorbed this selling pressure over the last few weeks and nearly actually 2 to 3 months, we do need to see the price action sustain above that prior sell side liquidity, that $89,000 region, to confirm we are going higher. Until then, unfortunately, we are still in a downtrend, and while we are in a downtrend and we have not had those bullish confirmations, we still are at risk of downward price action. So we need to be aware of that. I'm seeing a lot of people blindsiding themselves, essentially going fully into the bull case at the moment, saying altcoin season back, the bull market is back, etc., etc. And while it is awesome to see the price action rally, we need to be waiting for confirmation. I'll say it again, confirmation is the insurance you pay to be right, particularly when we are so close to these confirmation levels. If we take a percentage move, we're only around about 1 to 2% away, 2% away from having that confirmation, and sometimes that 2% is worth foregoing if it is going to significantly increase the probabilities of success. Again, everyone has their own risk tolerance, everyone has their own strategies, everyone has their own plans, so you need to make do what you believe is best. But I'm looking at the price action. I'm not really paying very close attention to the price. I'm more or less watching how the price reacts to these prior horizontal liquidity levels, and that is going to give me a better indication of how the price is likely going to move forward than the price itself. Remember, when it comes to investing, when it comes to trading, what makes you money is not the value of which you buy, should I say the value of the asset at the time of which you buy, but the percentage change between your entries and your exit. That is what really matters. So it is easy to get lost in the number, and you need to start focusing on what actually makes you money. So let's move over to the short term, guys. We're going to be taking a look at the short term price action, the macro charts, the best case and worst case scenarios today, exactly what needs to happen for the bullish case to play out and the risk of that bearish case still. Let's move over to market data. 24-hour volume up 17%, liquidations up 13%, sitting at 252 million, 70 million coming from longs, 180 million coming from shorts. Again, a bit of a short squeeze toward the upside. Looking at the S&P 500, some pretty good movements here on the S&P 500, breaking above that major level of resistance here at 5,750, the prior weekly opening price of the prior red candle. Pushing above here is a very good start to the week, seeing a lot of strength, but we do have our next level of resistance we are now currently pushing into, and this is going to be sitting at 5.8 to around 5.85. Again, we need to break above this region to see continuations, but if we're looking for weekly closes, if we're looking for what will be a good bullish weekly close, we will need to close at least above this horizontal level at around 5,750 to confirm we have actually exceeded the opening price of the candle, of which we saw the correction under the 50 moving average. This would be a good sign of a reversal. If we are able to push even past this 5,850 level, that would be a much better sign of a reversal. But until then, this is going to be our local resistance zone where rejections could take place over the next 4 days. We are also watching that daily RSI. We do want to see a RSI breakout. If we get that RSI breakout, that is when we're going to be confident that the price action will continue upwards. Until then, we do run the risk of corrections, or worst case, creating higher lows somewhere below that 6,100 level, which could then result in a laddering down effect. So we need to see that momentum break positive to be confident that whatever kind of rally, whatever kind of reversal is beginning to develop will actually sustain, all right? So let's go ahead and now move over to the DXY. The DXY looking pretty standard as we drew up yesterday in yesterday's video. We are expecting more just gradual sideways chop over here for quite some time. And of course, we do have that pinching occurring on the moving averages between the 50 and the 200. And we do expect that the directional breakout of the moving averages will likely result in a continuation. We could see deviation from the 50 as we usually do before a correction under the 200. This would be best case scenario for risk assets. And of course, if we do see that move occur, we are watching for range low retests around that 100 point. Generally, after we see range high deviation from horizontal consolidations, we do eventually move towards that range low prior to breaking back above the range high. So the probabilities on the short term are a little bit more skewed slightly upwards over here as we are retesting support. But if we're zooming out to like July and maybe even Q3, Q4, it is expected we come on down to that 100 region. So overall on the macro, that is looking pretty decent for risk assets there. Let's go ahead and jump into Bitcoin. Now, before we do, if you are interested in supporting the channel even further and supporting yourself in your trading, take literally 30 seconds. Click the links down below, join BitGet, BitUnix, or BingX, pick one of those exchanges. These are the exchanges I use on a daily basis and have been doing so for quite some time. As you can see, guys, you'll get a lifetime trading fee discount of 15% with any of those links, which can build up to 45% based on your trading volume. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's get straight back into it. Now I want to address the recent rally. Now we have seen the price action push up quite some bit over here, and we have seen a pretty good move. Now I'm not going to take away from it. This has been a pretty good move. We've seen some higher lows established on the trend line, creating a very clear uptrend. We have seen prior highs break on the short term, which is a very good sign. However, we are still sitting underneath that weekly downtrend represented by this diagonal trend line. Now, when we're looking at trends, a very common saying is the trend is your friend until it ends. And when we look at confirmation for trend breakouts, we generally watch for three things. We watch for strength, we watch for structure, we watch for trend. In terms of strength, we watch for positive momentum shifts. In terms of trend, we are watching for the actual trend itself to flip. And in terms of structure, we are watching any relevant structural formations that may allude to a greater probability of a directional continuation in any specific direction. In this instance, we have got our positive momentum shift that happened on a daily quite some time ago. Ignore this trend line. This is a weekly trend line. And in terms of our trend, we are still sitting underneath that daily downtrend. So as we've said many times, and if you've been following the channel for quite some time, you would know that I've basically been bearish since these levels over here. I've been predicting and being basically warning of major corrections according to one of the charts we discussed, which was our 62.09 on the weekly RSI. That gave us a 21.5% correction, and it predicted that around 3 or 4 weeks, if not more, in advance. As we came down into that $76,000 region, we said that I'm more bullish here than I am bearish, and the probabilities, although are still pointing down, we could see some sort of relief rally as we did begin to see a bit of bearish exhaustion develop via bullish divergences printing, and the price action moving into a more chop rather than a more exponential decrease in value. Now, with that being said, we have seen a nice move towards our next level of resistance. Remember, prior support becomes current or future resistance. This is going to be the point of which the majority of people begin to get excessively bullish because they are in anticipation of a breakout that has yet to occur. Now, I do hope we see a breakout, all right? I've got a lot of people saying, well, you just want to enter at a lower price. I don't care about the price. I bought Bitcoin at 16.5K. I sold at 104,000 plus. I don't really care where Bitcoin goes. I never really have. I'm not an investor. I'm a trader. Everyone trades the market different. Everyone has their own strategies. That is what I do. So I care about the percentage change. I don't care about the value. I will enter when my strategy tells me it is best to enter. But in terms of this structure right here, we are still in a downtrend and we are very, very close to the breakout. So sometimes, again, as I said in the intro, it is best to wait for that confirmation, particularly when the invalidations are so close and when the risk, the opportunity loss, if you're an investor, is very, very minimal to wait for such significant confirmation. In terms of our horizontal levels, if we're looking at from a purely a technical perspective and a structural perspective, this is a level of resistance we need to take very seriously. And if we do not break above this resistance, it could just result in yet again another higher low printing before we see a correction back toward the downside. Now, ideally, we break through and we see the market rally, but the market doesn't work in ideals. We have to take it at face value for how it is developing. So let's talk about the bullish case scenario, and then let's go over the worst case scenario, and then let's talk about what would need to happen for each of these scenarios to play out and our targets for those scenarios. So we're fully prepared for absolutely everything and we're aware of what is happening. So in terms of our weekly chart, because we're going to start on a weekly chart, the weekly chart has all of the answers currently. Now, the weekly chart has the answers to the bullish case scenario, it has the answers to the bearish case scenario, it has even identified critical targets of which we would expect the price action to reach when these and if these scenarios play out. Let's start off with the bullish case scenario. If we are taking a look at our RSI, we have got a very clear and very obvious pattern that has been developing over the course of 2023, 2024, and 2025, so 2+ years. And this is a pattern of which where we see these aggressive rallies toward the upside, followed by periods of decreasing momentum and bearish absorption, right? We see absorption of the selling pressure, followed by an expansionary move upwards, then again into a period of consolidation, followed by yet again another expansionary move. If we take a look at the RSI, we can see it much more clearly represented in the RSI than we can see in the price action. Looking at the RSI, ever since January 2023, we broke above a critical level at 44.62. Now, the 44.62 is a level we're going to be discussing for both our bullish and our bearish cases today, as it is relevant in both. But if we take a look at where that breakout occurred, it occurred here, January 2023, and that marked essentially the end of the macro downtrend and the bear market we've been in since 2021 onwards. So that was the end of the bear market, and we bought in that consolidation just prior. That was all given again publicly on YouTube and of course in our Telegram channels. If you take a look at this, we can see we had a major horizontal consolidation develop at around April 2023 to October 2023, so quite some time over there. With that consolidation, we saw a downtrend in the RSI, which eventually broke toward the upside, resulting in the selling pressure that was developing in this range being fully absorbed and the buyers taking back over the price action, propelling the price action upwards to a new high. After that, we saw again a period of mass consolidation. This time it was a descending channel formation. We had falling momentum. When we broke through that RSI, we yet again saw a expansionary move toward the upside, again a brand new all-time high. What are we seeing now? We are seeing a very similar pattern in terms of the RSI. The RSI has a very clear weekly downtrend, very similar to the prior two, and we are watching for a breakout of that weekly RSI. Now, the reason the weekly RSI breakout is going to be most important is because for us to have that weekly RSI breakout, we also need to break through this weekly level of horizontal resistance. So we've got confluence from our strength over here in representation of our RSI, from our structural formations in terms of our horizontal lows, and then from our trend in regards to the weekly downtrend. So when we're looking at that 3-point confirmation method, strength, structure, trend, we have got all three of those lined up for potential bullish shifts and thus confirmation very shortly if we get those moves. If that occurs, the history would repeat. We would likely see an expansionary move potentially up into a new high. That is the bullish case scenario. That is the best case scenario. If we take a look at the short term, for this to occur, we need to, of course, see the breakout of that. Let's go ahead and drag this one down, actually, just to the relevant levels, okay? We need to see a breakout of that horizontal resistance, which lines up perfectly with that downtrend. We need to see that occur prior to breaking this uptrend. We'll come back to the short term at the end of today's video, but let's stick to the higher time frame just for a little bit longer. That is best case scenario. Let's talk about worst case scenario. So the worst case scenario for Bitcoin is going to be if we fail to see the bullish trigger points occur, we will continue along the current trajectory of price action, which is a downtrend at the moment. For us to confirm the next leg toward the downside, we'll say it over here again, between that $76,000 region and this region over here, this horizontal resistance, we are kind of in a decision territory. The 50 EMA acting as a bearish trigger, the horizontal resistance acting as a bullish trigger with our 3 points of confirmation. Between here, we are going to see continuous chop and sideways price action for however long it needs before one of these two levels breaks. And when one of those two levels breaks, that is going to confirm the directional continuation. For the bearish case scenario, the 50 EMA is going to be confirmation for the 44.62 on the RSI. If we take another look at the RSI, we can note that the prior consolidation periods, we had retests of 44.62. We can see we've done that now 3 times. A loss of 44.62 would result in the 50 EMA being lost. If we lose the 50 EMA, what happens? We drop into the Gaussian channel upper band. If we drop into the Gaussian channel upper band, that will be the first time we have done so since the beginning of the bull market, indicating a higher time frame macro downtrend is possible. Where would we expect the price action to go? We would be watching for prior sell side liquidity, prior liquidity levels, particularly 52 to 55,000. Worst case scenario. For that to occur, the bullish breakout cannot happen. For that to occur, the 50 EMA has to be lost. The lower level on the RSI, 44.62, has to be lost. So again, we are in a decision zone. And when we are in these decision zones, we see a lot of conflicting data. And we see, most importantly, a hell of a lot of conflicting opinions. Remember, everyone who is screaming buy, bull market, have been doing so ever since the top. There's people on Twitter, people on YouTube have been literally saying it is bullish, this entire move down, okay? There's also people that have been saying this is bearish, this entire move up. I don't do that, guys. Remember, you can check and you can go back, check everything we have said. We have specifically been bullish from here all the way up to 96, sold at 96, bought altcoins, exit 104. We've been bearish since. We will turn bullish when we believe the time is right. And I don't mind being quote unquote late, because technically you're not late to anything. It is you versus you in the market. I'm not versing person B or person A. I don't care about what they do. I care about my decisions. And sometimes being out of the market, or at least if you're just trading, sometimes that is the right decision. Sometimes skipping a turn is the decision to make. And if you have to buy a little bit higher, you don't lose anything by doing so, because what makes you money is not the price you buy, but the percentage change between your purchase and your exits. Now, a lot of people are going to say, oh, gibberish, gibberish, you just went lower, and they can think that. But they weren't around talking crap when we bought a 16.5K and held all the way up when everyone was screaming up and down, up and down, up and down the entire way. So, focus on yourself. The key message I'm trying to push over here, because I'm seeing a lot of conflicting opinions all over the place, is don't even listen to me. This is my opinion. If my opinion resonates with what I'm saying to you and it makes sense to you, then listen to it. But you should take all the information you gather, whether it's from a lot of sources or from a very few sources, or even just from yourself, and then apply that to yourself and make the decisions that you think is best. Because at the end of the day, everyone's situation is different, everyone's risk tolerance is different, everyone's decisions are slightly different, and you need to act on what you think is best in the market. So block out the noise, focus on you, because you are the one who is making the decisions. Thanks for tuning in, guys. Have a fantastic rest of your day. That is going to be our bullish and bearish case scenario. We'll really quickly finish up on the short term, because I nearly forgot to talk about that. The short term price action, very clear stuff, right? Very clear stuff. Uptrend on the RSI, right over here. Uptrend on the price action, right over there. For us to be seeing a very, very bad correction, we need to lose 80,000. Until we lose 80,000, we have the potential to break that downtrend. And I really do hope we do see that, but time will tell, right? If we lose 80K, I think that is going to be the confirmation the bears are going to need to confirm we are going to go much lower. But until then, we do run the risk of a sideways chop, until we have that definitive directional move. I'll finish off by saying one more thing. If we take a look at that weekly 50 EMA, we can see it converges around the 14th of April, which means we have around until the 14th of April to really make a strong directional move upwards to avoid a breakdown. And thus, we will likely see, if we see that move upwards, a continuation, hopefully into new highs, but we'll see how the price develops. Thanks for tuning in. Have a fantastic day. Catch you in the next one on Thursday. I'll see you then.